Anthem Biosciences IPO is here. It is showing all the signs of getting oversubscribed. The GMP is currently at 100 rupees, indicating a listing gain of 17%. Anthem Biosciences is India's fastest growing CRDMO company. This IPO is purely OFS, which means that every single rupee from the IPO proceeds are taken by the promoter who are selling their 2.17% stakes. But is it worth your investment? Let's break it down in this video and simplify so that you can make an informed decision. So what does this company do? Anthem Biosciences is a contract research, development and manufacturing organization, and it has created its own niche in this business. It helps global pharma companies for their drug discovery and development. As of March 2024, it has served more than 550 clients across 44 countries, including giants like US, Europe and Japan. Average ROE of this company stands as staggering 21% in last 3 years. Average ROCE of this company stands as 21.8% in last 3 years. Debt to equity ratio is excellent, which is only 0.1%, which is a very great sign for this company. EBITDA margins are at 32%, and it also reported positive cash flows in the last 3 years. These are very strong numbers, especially for a biotech player who is scaling aggressively. Grown its revenue at a rate of 32% CAGR in last 3 years, but the net profit margins has taken a hit. It is growing at only 8% CAGR in last 3 years. While all these top lines have impressive figures, margins are experiencing real pressure here. At the upper price band of 570 rupees, this IPO is valued at a price to earning ratio of 71 times, and price to booking ratio stands at 13 times. Peers are trading at a price to earning ratio of 90 times and price to book ratio of 13 times. Anthem Biosciences IPO has raised 1,016 crores from the big short anchor investors. This shows strong institutional confidence ahead of this IPO. This also boosts the confidence and sentiments of retail investors and HNI investors. So let's talk about strengths first. Anthem Biosciences is the fastest growing CRDMO company to cross 1,000 crores in revenue. Its strong focus on R&D capabilities, automated manufacturing with high regulatory compliance, specialized APIs are its strong strengths. Here comes some of its weaknesses in the company. Margins are seeing so much of pressure and bringing down the profitability, lagging behind the revenue. High client concentration is very risky. A small regulatory changes can eat a bulk of its revenue. CRDMO space is growing at a high growth pace, and most of the pharma and biotech companies are outsourcing their manufacturing and R&D services, which places this company at a very good position. Here for Anthem Biosciences, efficiency, innovation and pricing are the real differentiators for its future growth. The current GMP as on 13th July stands between 95 rupees to 100 rupees, which puts the listing price approximately between 660 to 670. And if this IPO lists at 670 rupees, it is going to be a strong 17% listing gains. What is my view on this IPO? If you are a long-term investor and having good conviction on this biotech industry, Anthem could be a great fit for your portfolio. Given its tech-driven approach, global reach and a deep R&D focus, you should be concerned about its higher valuation and flat profit growth. You should be evaluating your risk thoroughly. Analyze the IPO top to bottom and long-term conviction before subscribing to this IPO. You could wait for its third day of subscription figures to understand whether this IPO is heading in the right direction. So are you going to invest in this IPO? Why and why not? Let me know in the comment section.